Most people never build real wealth because they're waiting for some complicated investment secret. They think the stock market is rigged. They think they don't have enough money to start. Or they're convinced they need to pick individual stocks, like some Wall Street genius. Here's the truth. They're wrong on all three counts. In fact, 87% of professional money managers underperform a simple index fund over a 15-year period. That's not speculation. That's data from the S&P 500. So if you're sitting here thinking investing is too hard, too risky, or not for people like you, I'm about to change your mind in the next 6 minutes. Let's start with what an index fund actually is, because this word gets thrown around, and it sounds more complicated than it really is. An index fund is basically a collection of stocks bundled together that tracks a specific market, like the S&P 500, which is just the 500 largest companies in America. Instead of you picking individual stocks and hoping you're right, you're buying a tiny slice of all 500 companies. Apple, Microsoft, Coca-Cola, Walmart, you own a piece of all of them. When one company dips, another rises. That's called diversification, and it's your protection against catastrophic losses. So why do index funds actually work? Because they're boring. Seriously, the magic isn't in beating the market, it's in not trying to. The average investor makes emotional decisions. They buy when everyone's excited. They sell when everyone's panicking. They chase hot stocks and meme coins. Index fund investors? They buy and forget. They automate their contributions and let compound interest do the heavy lifting. Over 30 years, $500 per month invested in a basic index fund, averaging 10% annual returns, which is the historical market average, turns into $1.2 million. Not because you're a genius, because you're patient. Now let's talk action steps, because knowledge without execution is just entertainment. Step 1. Open a brokerage account. That's it. Vanguard, Fidelity, or Charles Schwab. All of them are legitimate, low cost, and user-friendly. It takes 15 minutes and a valid ID. Step 2. Pick your index fund. If you're completely lost, just buy VEOU or VTI. These are Vanguard's total market index funds with expense ratios under 0.044%. That means for every $10,000 you invest, you're paying $4 per year. Step 3. Set up automatic monthly contributions. Even $100 per month builds real wealth. Don't overthink it. Stop waiting for the perfect time to invest. Time in the market beats timing the market every single time. But let me hit you with the mistakes I see people make constantly. Mistake number 1. Trying to time the market. Buying when the market's down and selling when it's up sounds smart until you realize that even professional traders fail at this 70% of the time. Mistake 2. Day trading thinking you'll get rich quick. You won't. Statistically, 90% of day traders lose money. Mistake 3. Panic selling during crashes. The market crashes, you see red numbers, and you sell everything at a loss. Then it recovers, and you miss the gains. The investors who got rich? They kept buying during the crash. Mistake 4, and this is the big one, keeping your money in a savings account, earning 0.01% interest, while inflation is eating away at your purchasing power. Your money is literally becoming worth less. In a savings account, earning 0.01% with 3% inflation, you're losing money. In index funds earning 10% on average, you're building wealth. This isn't me being aggressive, it's mathematics. Compound interest is your secret weapon for financial freedom. Albert Einstein called it the eighth wonder of the world. Start now. Stay consistent. And in 30 years, you won't recognize your net worth. Before you go, I need to be crystal clear. This is not financial advice. I'm not a financial advisor, and everyone's situation is different. Do your own research, understand your own risk tolerance, and if you need personalized guidance, talk to a qualified financial professional. That said, the math is simple. Time plus compound interest plus consistency equals wealth. You now have everything you need. The only thing stopping you is action. If this video helped you understand index funds and you're ready to stop being broke, smash the like button. Subscribe for more personal finance breakdowns and money tips that actually move the needle. And if you want the exact fund names and brokerage recommendations, check the description. Let's build wealth together.